Okay, I'd like to do the second part on Japan. As everyone knows, I do these free form, and today I've had no form. I've done this way too many times, so hopefully this one is semi-coherent because I'm gonna go with it, okay? So, listen, yesterday we went over the 5 factors because of deglobalization that people are gonna have to make their decisions. They're gonna have to factor these things in, okay? But every country has been in existence before Trump started tariffing everybody. And everyone has their own financial situation, some good, some bad, some terrible, okay? So really what we want to think about is, given the country, whoever it is, in this case Japan, situation, how does the Trump tariffs affect this country in the sense of, do they reject the terms that we give them? Do they accept them? Or do they cut another deal with somebody else? Because what we are asking of Japan is, I would say, fairly onerous. And this is why. We know that Japan has the most debt in the world. It's a fact. Their government, depends on how you look at, 235 to 265, so we'll say 250, but they have 400% of GDP all in between people, corporations, and the government. The US is 250, just as a place to look. You can stop and read this on your own. So the first point of contention that Japan has to deal with is they have all this debt. The second is their demographics, which are pretty bad. Actually, some of the worst in the world, all right? And this has a lot to do with the social contract. You know, we talk about demographics, everyone says, well, in 20 years. Listen, the social contract that exists in every single country is gonna break down way before 20 years because of our inability right now to finance it out of, let's say, cash flow. And so most of it's done through debt. So when you look around the world and you say, what could be the canaries in the coal mine to the financial services, financial structure of the globe, I should say, I would say 2 countries that, as canaries, not that they're the worst, but they're the canaries. The first one would be the UK, Britain, okay? And they have the issue with issuing more debt to fulfill all their obligations that they're trying to do. And they're having their issues, and we'll discuss them another day. But to me, I watch them to give me indication of what's going to happen to other people, other countries. And if you watch what's going on there right now, they have some real issues. The second one, and probably the biggest one, is Japan. And that is because of the Japanese yen carry trade. This is a huge trade. So as we said before, it's between $4 and $7 trillion. And this, when you say, why is this big, is because if the yen carry trade breaks, that means there's no reason for the investment world around the globe, because everyone does it, to buy BOJ, Bank of Japan bonds, their government bonds. They're going to lose $4 to $7 trillion, and they can't afford that. Trust me, they can't. All right. You already see their debt levels. They won't be able to roll their debt, and then how are they going to maintain their social contract? So when you look and you say, wow, they have, the yen has been moving down now, and the reason that it's been moving down is because we, the U.S., are going to put tariffs on Japan, which means that they're going to slow down the economy, and by slowing down the economy, then the yen goes down. And that's something that the Americans are putting tremendous pressure on Japan on. One, we've already told them we want at 130 or higher, okay? And we're at 147, we're a long way away. And if we did go to 130, 125, it would break the Japanese yen trade, which would literally, virtually, practically sink the Japanese economy, all right? So then the next thing is the interest rates. So the tariffs are coming on, an outside force, which is going to slow down the economy. And then you sit there and say, we want you to have a higher yen, and that's your responsibility to get it higher. So do they raise their interest rates? And you have to remember something. The growth rate in Japan is about 0.7%. It's the first time it's been positive in forever, right? So now, because of the US demands, are they going to raise their interest rates to protect the yen? I don't know. Would you do that? They're also facing pressure because people see this happening. And it's being, where we see this the most is in their 30-year bond. This is their 30-year bond. Now, I want to say here, in 2021, around 2022, they brought in Ueda, an academic, to be the Bank of Japan's new head, Lord Powell. And he was brought in for one reason only. He said he was going to normalize the rates, who for 9 or 10 years had been negative. And when you really go back, it goes back to literally 1991, where they've been doing QE and doing financial repression. So you can see here when Ueda came in and started going through the process of trying to normalize the Japanese rates, you can see what happened with the 30-year. Now, it's important to note, we've said this many, many times, the central banks can control the short end, they can't control the long end. And just as an aside, look at what Trump always talks about, lowering the interest rate 3% on the short end, because that's the only thing that the central bank can do. Whether it's the right thing to do or not doesn't matter in this discussion. I'm just saying that's where he wants to cut. So Japan is trying to normalize. They've finally got a small growth rate. They actually have inflation again, depends on how you look at it. It's 3.7 when you take out food, but food's going up like between 11 and 12% in Japan. It's 3%. You see where their rates are. So they have negative rates. Their rates are 25 basis points, their short rates. So basically, they're negative 3% real interest rates, all right? That's where they are today. So they know if they raise their interest rates, I guess 4%, they can't do that. If they raise it 1%, they double this year's budget deficit, 1%, because their debt's so big, all right? So they are walking an extremely fine line. And Ueda said before he wanted to raise the rates and he had a plan to raise the rates, but when Trump came in and the tariffs came in, that obviously went to the side because now the tariffs are going to hurt the economy. And since the Japanese already own a large percent of their stock market, and I think 50 to 55% of their bonds, their government bonds, QE is, I don't know, is that really an option now? I don't know. I really don't. So here's the question that we have to ask ourselves, given the 5 factors, and given where Japan is as an economy, which is very, very, tough spot. And not only that, to the 4th largest economy, everyone in the world is in the yen carry trade. This is a huge issue. So Japan now has to sit there and say, if we do what the Americans want us to do, we will sink the economy, blow up our bonds, and totally blow up the yen, and maybe end the yen carry trade, which could have repercussions across the globe. Or we could say no, take our hit on the tariffs, and then go cut a deal with somebody else to see if we can't get a better deal. I don't know. What do you think? What would you do? Tell me in the comments, and like and follow.